Hi guys, welcome back to Marant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. This is Connecting the Dots Part 8. This is an official breakdown of Bed Bath & Beyond to the ground, I guess. I went digging pretty deep on this one. I hope you guys follow me. The latest updates, I have everything you need. Let's get to it. I'm going to take myself off the screen so we can pay attention to what's going on with Bed Bath & Beyond. All right, guys, so Bed Bath & Beyond, the takeover. And that's what this is right here. Apologize, I was reading this screen right here because I'm really trying to understand why it's not a hostile takeover and it's a vulture capitalist move. So it's just part of it, guys. I was calling a hostile takeover and I had to look at it. You know, that's what happened with GameStop, right? Ryan Cohen, Alan Adel, and Larry Chang, they came in, they put their boots down and they said, hey, guess what? Everyone get out. All of you distressed credit investors, all you guys that have ties to companies like KKR and BCG, we don't need you in. And so if you guys are not familiar with distressed credit investors, there's a whole slew of them, and they have all the ties together. It's like a fraternity. It's like a club. And if you want to get in it, well, then you have to gut companies. And the way you do it is like this. This is called vulture capitalism. So a vulture capitalist is a type of investor that scavenges off of distressed companies for profit, like a vulture scavenges off of dead bodies of animals. Vulture capitalists typically receive criticism because their tactics involve the targeting of individuals and or companies who are already experiencing financial difficulties. So what are they doing? They're preying on the weak. They go in, they see that you're stretched thin, that you need money, you need to make some payments on bonds, or you need some inventory levels increased, and you have right now the best distressed credit cycle of your lifetime because the interest rates keep going up. And as the interest rates keep going up, companies start falling apart because they can't pay off the debt. It's not possible. So the Fed's going to keep doing this until they crumble. And I'm talking about until they crumble other companies. They want companies to fail. They want someone to blame for this recession. And they're just waiting for the next big bank or whomever that is over leveraged in these places. And I'm telling you guys, it might be GameStop. It might be Bed Bath & Beyond. It might be AMC. All I know is I'm not putting my money in on a company that has distressed credit and distressed credit investors involved in it. But I'm going to go ahead and explain this one for you, and you guys follow suit, okay? So here's the next screen. And of course, I would click on the wrong thing. Here we go. Bed Bath. Oh, by the way, no edits, no cuts. This is a one-take session, and don't mind me. I'm looking at the camera right now, and I'm literally on the mic. It's okay. Bed Bath & Beyond net income. So this was their net income year over year. They paid dividends. They were doing great. But in 2019, they had their first year of negative net income. That was the writing on the wall for a lot of people. That right there told the distressed credit investors, let's get over there. They're failing. It happens, guys. A lot of companies that show a loss from year to year, they will have these guys knocking on the door, offering money, but for what? Right? We always have to be careful. So in 2019, these three investors, and this is Ancora, Legion Partners, and Macellum Capital Management, they went ahead and wrote a letter to Bed Bath & Beyond urging that they allow them to replace the CEO, who's overpaid. The board of directors replaced them as well, and they advised to put 16 potential people on the board at Bed Bath & Beyond. We're going to go break down these three guys. Like, who are they, right? But before we do, I want to show you Bed Bath & Beyond earnings and why they haven't recovered and why they keep going down. Top line revenue is coming down because they're closing stores, but we'll go over fundamentals in another slide. Here's the pay. So between Steve Tamaris, Warren Eisenberg, and Leonard Feinstein, they went ahead and made $313 million. That's what they made from the time frame of 03 all the way to 17. Extremely overpaid for a company. Yes, they do make money, but these guys are being paid handsomely. And right there and then in 2018, 2019, they couldn't afford to pay these guys what they were paying them. So I just wanted you to know, extremely overpaid. So that's where they were trying to get them out. And the individuals from Legion Partners, just so we can break it down, this is Christopher S. Kipper. This individual here, he invented this company called Legion Partners. He's a co-founder. And I'm going to tell you guys something. If you look at his history, he has history with Ridgestone Corporation. He has more history at Ernst & Young. He has more, he has Shamrock. Like, I'm going to break all this down for you and let you know what his pedigree is, because where they come from is who they are. That's my main thing. So right here, you'll see he is the co-founder, and this is Chris, he was the co-founder of Legion Partners, but he worked for Shamrock Capital, he's vice president, Ridgestone Corporation, and Global Crossing. If you notice, not on this one right here, in here, nowhere in this verbiage did they say Global Crossing. It's like a thing you don't want people to know that you used to work for. What happens here on Wall Street, there are some companies that did some really bad things back in the day. And they robbed retail investors, and they violated SEC rules, and they got shut down. And when he doesn't show you who Global Crossing and that he was the director of financial planning and he worked there, they don't tell you this, but I'll tell you. In 1997 is when he got there, right? 1998, January. Global Crossing was founded by Gary Winnick. Gary Winnick was he was the former manager of the bond desk at Drexel, Burnham, and Lambert. If you know who they are, guys, they're the most notorious hedge fund, junk bond hedge fund, period. So, not a fan of them, and that's exactly where this guy comes from. He comes from Gary Winnick and Global Crossing. If you don't know, Global Crossing was involved in the largest bankruptcy in the history of the stock market at the time, and the issue was they were evaluated at $47 billion. They really had a net value of nothing, and it was just a play on the books. They deceived investors. This is Gary Winnick here. Gary Winnick, who was at Global Crossing, went ahead and then after the bankruptcy, took his money and he put it into Pacific Capital Group, oh my goodness. And they went ahead and started the next corporation. So the next corporation that they funded was, in fact, Ridgestone Corporation. So Ridgestone is what he went ahead and funded, along with this gentleman here, Abbott L. Brown. Abbott L. Brown went from Global Crossing in the early 2000s, and he focused on Ridgestone Corporation. So to get all the way from Drexel, Burnham, and Lambert, you're going to go here to the previous one, guys. They went to right here, Global Crossing. Then they went to Ridgestone Corporation. So now you know the connection, the family tree of what this guy is right here, Christopher Kepper. Now, he also worked for Shamrock. Shamrock is Disney. And Disney has plenty of people in there that deal with M&A, that deal with taking over distressed credit investors. I'll give you two examples here. Patrick Russo, he works for FTI Consulting, one of the top 6 consulting firms out there to get you to do the wrong thing. I would just tell you that. Laura Held, she works there too, and she used to work for, I believe it'll tell you at the bottom. Oh, there it is. It says, Shamrock assets include hotels, radio, television stations. Shamrock often takes an aggressive strategy, launching hostile takeovers. And she worked for the Call Out Group and Credit Suisse. So, to give an example, they hire the dirt of the dirt because they are the dirt. Now, that was Legion Partners, right? The second group in there was called Macellum Capital Management. That's Jonathan Duskin. Jonathan Duskin is the partner, guys. This guy is the actual individual who strong-armed, who manipulated, who masterminded this Bed Bath & Beyond takeover. He is currently piloting the takeover for Kohl's. If you're not familiar with that, go look at that one. It's happening the same way for Bed Bath & Beyond. Kohl's had a cash burn of $1.7 billion this year. They have multiple KKR, Blackstone. Everyone's on the board. They have multiple people on there. But let's talk about Jonathan Duskin because we're going to talk about him for a minute. He used to work for SAC Capital. I know. Trust me. He was also working for, I believe it's here. It'll say Printence Capital Management Group. I'm not too good with that name. But you guys remember SAC Capital, don't you? That's Steve Cohen. Steve Cohen, reputation on Wall Street more than widely, was tarnished when some questioned what they did. They did some insider trading and they were guilty. He paid off $1.8 billion as a penalty. Some people didn't talk in that transaction at SAC Capital, but you can see Jonathan Duskin comes from there, and so do a lot of other people. If you look at all the other investment firms that are dealing with GameStop, AMC, and Bed Bath & Beyond, they all have ties right here to this hedge fund, SAC Capital. So just so you know, these are the individuals orchestrating this maneuver that's happening at Bed Bath & Beyond. Still to this day, just so you guys are aware. Now, buying stock in Bed Bath & Beyond, as you can see, he told his old boss, Mike Zimmerman, to buy in, and he did. I just highlighted that little bottom part, but if you read up here, it tells you that Arrow Street Capital, Citadel Investment Group, everyone's buying in on Bed Bath & Beyond. Legion Partners are buying in, and this is all happening at the time that they wrote the letter. So everyone's in on it, guys. I'm going to ask you guys something. How do three guys, right, three different firms, and we're going to go over it in a minute, these three different firms, Ancora, Legion Partners, and Macellum, how do they all get together, write a letter, and say this is what we think is best for this company? Well, there's senior analysts like Austin Baker. Austin Baker worked for McKinsey & Company. If you're not familiar with McKinsey & Company, they are a consulting firm as well. They are considered one of the four mavericks of, and those four, what they called the four mavericks, and they were the individuals who started these companies. It was Fred Gluck of McKinsey & Company, Boston Consulting Group's Bruce Henderson, Bill Bain and Bain & Company, and Harvard Business School professor Michael Porter. These guys actually, they wrote a book about them saying that they were the four mavericks of individuals that were trying to change companies from within, giving these corporations the wrong move. And I started reading passages into this book. It's called The Lords of Strategy. Feel free to, guys. I was getting down today just trying to figure out what distressed credit hedge funds actually do, how they manipulate, and how they go about it. So here we go. Bed Bath & Beyond nominated May 1st of 2019. I want you to know the day. It was May 1st when they nominated these guys. Okay? And so Harriet Edelman is still on the board of directors. She was the spokesman to the press when Gustavo Arnell jumped off the roof, the CFO who killed himself just a couple of months ago from Bed Bath & Beyond. She was a spokesperson, which is kind of telling because she has ties with Apollo, with numerous hedge funds, distressed credit investors. And the Avon Products one, that's the one that kills me because she was with Avon for 30 years. But if you know the address of Avon Products, if you knew their address, it would shock you because they have the same address as Apollo. They have the same building. They share it, and she was there for 30 years. This next one is the person Harsha. I don't know how to say the last name. I'm not even going to try. Boston Consulting Group. It kind of tells you. Andrea Weiss, she's all consulting firms. It's crazy because they're hiring people for consulting firms, right? Like people that are going to give you ideas on how to renegotiate what you're currently doing and who to sell off to. That's what these guys do. But I'll explain it in more depth because these are the ones that they nominated, right? The 5 newly appointed independent directors. I'm sorry, not nominated, but appointed. Now here's the nominations. I got a handful of them because there was 16 of them, guys. And when I started reading I read their whole bios. I went and dissected everything. I looked at this guy, Alexander W. Smith. Be careful. He didn't make the cut, but they tried to get him there. He served as the chairman for Vitamin Shop. What I tell you about Vitamin Shop, guys? I told you there's ties within Vitamin Shop. There's ties within Art Van. He was the director at Art Van Furniture. Art Van did a deal with Thomas H. Lee, who killed himself 2 weeks ago. But this guy was also with Vitamin Shop. I'll go ahead and explain the Vitamin Shop connection in a little bit, but this kind of tells you who this individual is. But I want to show you something that they did with Pier 1 imports. Pier 1 Imports went ahead and filed for bankruptcy in February of 2020. Okay? And they closed all their Canadian stores. Sound familiar? 3 months later, they came back and they filed bankruptcy for all their stores. They liquidated everything by October of 2020. I'm just telling you, history can repeat itself. Here's another one they nominated. Joshua E. I believe it's Sketcheter. I'm not really good with that last name either. I challenge you. But this individual here, he's on the board of directors at a company called Viad Corp. Viad Corp Their director has direct ties to Apollo. He used to work there. He was one of the founders. I'm just telling you, it happens that way. Or one of the members on the board of directors there for Apollo. These guys all put people that have like-minded ideas on these boards, and for one reason only. And it's not to make investors money, and I mean the public money. You know, you guys who own the stock. But Jonathan Duskin is the guy who I want to talk about for a minute. Jonathan Duskin, he owned already 400,000 shares of Bed Bath & Beyond. So he's going in there letting you know he owns shares. But Mr. Duskin, he is the sole member of Macellum Advisors, right? So he's the main guy at the desk. It's kind of like Ryan Cohen and RC Ventures. This guy runs his own desk. But the part what I don't like about this guy is he was a managing director for Lehman Brothers. He managed to run that wrong, and now he's here in front of you. So it kind of tells you like who he is, but he's living off that dream. Remember, all those Lehman Brothers and Bear Stearns guys, they all had to get jobs somewhere, and then he's one of them. Now, Joseph Boehm, I'm showing you him. I'm showing him because at the very bottom it says here, member of the International Council of the Shopping Centers for 25 years, where he has been active in the University of Shopping Centers at the Wharton School of the University of Pennsylvania as a faculty member, assistant dean, and dean of leasing school. So they're putting individuals from Wharton School of University on the board of directors, or they're attempting to. And I'm going to explain it to you guys what that means right when we're done. This was the passage for Sue Gov. This is all they put in, guys. They didn't put in anything else. They just put she was there. Golfsmith International, she went ahead and helped them file for bankruptcy. She'd been with Zell's Corporation, and she left after 25 years. She was the COO over there. She was in charge of all their finance. And we all know that they've done deals with Apollo. They've been bought out before. But Sue Gove, that's all they had. Here's the strong arm. And if you hear Binks in the background, he just wants to play. And I apologize, guys. He's fighting the world. Hey, guys, this is real life. When I record these videos, no edits, no cuts, I'm still living life. So each of the nominees, other than Mr. Duskin, has granted Jonathan Duskin and Christopher Kepper. Remember what I told you guys. This is those two individuals, the ones who have ties all the way to the top, powers of attorney to execute certain SEC filings on other documents in connection with the solicitation. So they were deemed the team leaders for this takeover. But here's the crazy part for me. Why no one's talked about this. These Legion partners and Macellum, all of them, they shorted the stock, and I'm showing you the transactions, 3 to 4 months before they ever bought. I even show you the buy-in part right here. They bought in. They never bought again after that, and then they ran the stock up. If that's not an inside pump and dump from what I can see, this is crazy, guys. These guys were shorting the stock. They were buying puts. They were doing everything they could. And they were chopping it down just to get it to where they got it. And then it gapped up that next morning. And you tell me how that's even legal. How do all three hedge funds, how are they all allowed to do this in unison? And then they put people on the board, and then it goes crazy high. And who knows what they're selling off from that point. But I'm just letting you know those are the transactions that were shown. This is called the Vulture Agreement. I call it that, not anyone else. But this is what happened in May. That means after all the stock was bought, guys. I showed you all the dates. You guys can go run them back. From the 16 candidates, they knocked it down to 4. They all agreed to 4 people. And, of course, Sue Gov was one of them. And Joshua Sketchter, he was one as well. And the other 2 aren't even there anymore. One is, but whatever it may be. Now, from that moment after, okay, guys, they did the worst buyback program in the history of the stock market. When I tell you guys, Bed Bath & Beyond is a self-inflicted suicide victim, I can't help you guys. For anyone who's buying this stock who doesn't know this story, they have bought over almost $12 billion worth of shares at an average price of $44 a share. It is $1.30 today. You tell me how that's okay. Rather than stack their cash, they agreed to keep buying back their shares at prices that were not sustainable. They knew. It's not that they had an influx in cash. I promise you that. You guys can see the books just like I did. They were already down in 2019. They had a negative net cash position. So why the hell would you spend your cash other than you're getting the wrong information? You're being told the wrong thing. And they developed a debt because of it. And they're still here trying to tell you that they're buying back shares. How could you buy back shares when you don't have the cash to do it? So who's at fault for this? It's these guys. This is the board of directors for Bed Bath & Beyond. Harriet Edelman, Sue Gov, Carol Flatten, Jeffrey Kerwin, Shelley Lambard. You know, I know people want to give some of these guys a pass because people put them into their place and say, oh, well, Ryan Cohen selected some or whatever it may be. Guys, I don't care. You're all involved in this company, so let's go ahead and look at it. Harriet Edelman. This is the one I talked about for Avon. She's been with Avon, and then she's here still, and I don't trust her because she's with Assurant, and who's over there in Assurant? Two guys, one that used to be with GameStop, and the second guy, he's still with the Apollo-based company in New Mountain. I still remember. Carol Flatten. She's here, and she used to work for EP Energy Corp. EP Energy Corp is the one that she negotiated this bankruptcy from Apollo when they bought him out. Sue Gove. Sue Gove, if you look at her whole damn insert here, the one that really gets to me is Alvarez and Marsal and how people just push that to the side. You cannot do that. They're the number one consulting group, period, for distressed credit investors. They have the most employees for consulting. They have over 7,700 employees. Guys, they're massive. And I'm going to show you something in a minute. But Sue Gove is a plant that was put there by this gentleman here, Andrew Jawar. Andrew Jawar, who runs Apollo's finance retail section. This individual was on the chairman of the boards for the Fresh Market. Apollo bought the Fresh Market. They put him on the board of directors. Great. He's the chairman of the board. He assigned Sue Gove a position on the board of directors. An Apollo-run company, an Apollo-owned company. That kind of tells you how deep these ties run. And I didn't know it at the time, but when I started reading up on Alvarez and Marsal, I couldn't believe it. Alvarez and Marsal, in connection with Alex Partners, they have been brought to the board for this is for the FTX bankruptcy, guys. They're all together. They went over there with Sullivan and Cromwell, and they're charging them extraordinary amounts. They've already charged them over $12 million for consulting fees. The second largest one next to Sullivan and Cromwell. Everyone makes money off of bankruptcy. They're waiting for this to happen, and that's just from January to February. You're making $12 million. And what have you done? What did you advise? I want to know. Alvarez and Marsal, do you guys know? Do you guys want to know who they are? Same individuals that were involved with Enron? How about Lehman Brothers? The Lehman Brothers deal, and I'll explain it to you. Brian Marsal was reportedly one of the first people contacted by Harvey R. Miller on the hearing that Lehman Brothers was likely to go ahead and file Chapter 11. He got the phone call at 10:30 that night. You guys have seen the movies. You understand what happened. And guess who they were calling? They were calling Alvarez and Marsal. They're not just some little mom and pop. They're massive. They're monsters. And Sue Gov is a senior director for them. And that's not an issue to anybody. That's not like, hey, guys, guess what? This could go the wrong way. Well, it'll go the right way for the company. It'll go the right way for the people that own the debt or that are buying warrants. But Sue Gove, Holly Etlin, and David Kasten. Many would have you believe these are great hires. Holly Etlin, she works for Alex Partners. Guys, the same names are going to come around. It's going to be the same names the whole time. And why is it the same company names? Because all of these guys scratch each other's back. And there's one common thread, and I'm going to show it to you at the end. Blew my mind, by the way. Here we go. David Kasten, the vitamin shop. David Kasten was formerly of Toys R Us. He was a lead counsel there. He helped Bain Capital, KKR, and Vornado Realty Trust do what they do. This is a distressed credit investor's best friend. He is their lawyer. He used to go ahead and he also was general counsel for Sequicorp. And Sequicorp had on the board of directors Leon Black. He was on their board of directors. So it kind of tells you like who they are and how bad it is. And Leon Black is the founder of Apollo, by the way. Franchise Group is getting unconventional Apollo loan to buy Kohl's. Well, let's think about this. Macellum, okay, they are the advisors for Kohl's. Their they're advising Kohl's to go ahead and put themselves up for auction. On the backside of that, David Kasten, in addition to that, remember, they all have ties to Bed Bath & Beyond. David was the lawyer for the franchise group. Franchise group is who owns Vitamin Shop. Kohl's, which turned down a $9 billion offer at the start of the year, did not get any higher bids after putting itself up for sale in an auction pushed by activist investor Musellum Capital. Hey guys, that's only one guy. Musellum is just the one guy I told you. So it's not like it's a huge firm. That's the unfortunate part. And just so you know, I was showing you that Sequo did have Mr. Leon Black as the director. So next thing is I want to break out this misconception about Sue Gove. Her base salary is $1.4 million plus bonuses, comes in at around $2.7, almost $3 million. She's severely underpaid compared to the previous CEOs. But where she does lack even more than that is shares. People says, well, wait a minute, she bought in. She basically has to buy in. According to the bylaws, she has to hold a certain amount of shares as a CEO. But she bought in 50,000 shares, guys. She spent $230,000. That's it. I'm going to tell you right now, the last CEO, two CEOs before, Stephen Tamariz, and I'm not talking about Mark Trenton either. I'm talking about this guy had 2.3 million shares compared to her 50,000 shares. It is a small number. It is a terrible number. And why aren't you buying in right now, Sue? Why aren't you ever going to buy in at these low prices? Well, whenever the earnings come out, whenever you can show us that you're convinced that you're doing a great job, buy some more shares at $1.30. I might even buy in shares at this point. It's hella low. Fundamentals on Bed Bath & Beyond. They ended the period with $225 million in cash. They had a cash burn. They had a net loss this year so far of over $900 million. They're losing money by the day. And I know that people think that they're doing a great thing. They're closing up all these stores and they're liquidating. It takes time, guys. The SG&A from last year to this year, the difference is about $110 million. But yet their profit, the difference is $900 million. It's a 9-to-1 ratio. That is not a good delta. In the world of business, it's a terrible delta number. They're not doing enough fast enough. So by closing off everything, closing off their arteries that are Harmon and Canadian stores and another 250 additional Bed Bath & Beyond, maybe that gets them where they need to be. This is the historical potential dilution, which is currently happening apparently. I mean, I can't prove that. Somebody would tell you I can't, but we're getting there, right? So fully diluted is what it is. And I'm going to do one thing really quick. Oh, man, I couldn't reach it there. I apologize, guys. Give me 1 second. Maybe. I don't know. All right. I was trying to get to another screen, but I couldn't get there. I apologize, guys. Anyway, back to the stock here. I want you to read the bottom really quick. Okay, so at the bottom here, convertible preferred. What happened here is they went ahead and sold off these warrants, and they were preferred warrants, 59,000. The equivalent is about 2 shares per warrant from what I can read from here, 118 million shares. And I tell you, they made $100 million, or that's what they reported right now. I just got it reported today. And I'll tell you, however much money they actually made, just remember, whenever they're making money via offerings or warrants or share dilution, that's exactly what it is. It's diluting shareholder value. It's not in the opposite direction. So this is the filing here. Just to show you, they made $135 million gross proceeds. I don't know how people can actually translate this as being healthy and good. What it is, it's a survival tactic, but it's not going to last that much longer because right now, the cash position for the company states that they have enough money for 2.9 months. That means they can last 1 quarter. And if they go another quarter, and people are daydreaming saying they're going to be, net zero or they're going to get closer to that. I don't see how that's even possible. I've seen the stores. I've gone into myself, and every investor that I've talked to doesn't even shop there. That's the crazy part. So let's go and look at the stock. This is the life of the stock, guys. Went from $80 from 2014 all the way down to $1.27 and now $1.30. It will fall below $1.27 tomorrow. A lot of people think it's going to bounce up like they do every day. I just don't know. Here's the FUD, I guess. The New York Times put out yesterday, Hudson Bay Capital has essentially agreed to make sure that the troubled retailer will sell roughly $1 billion in shares as it tries to avoid bankruptcy. So Hudson Bay is here to help them dilute. This is according to the New York Times, not according to me. But I want to tell you guys something. Everyone gets excited about this whole play. Like they're going to make $1 million. It's going to moon, or it's a short squeeze. For me personally, to short squeeze or to do anything of that, like, delivering the shorts or getting off the actually delivering shares, they're on Reg Show and everyone wants to get excited. I'm telling you guys, just me to you, you have to have fundamentals. This company, no matter how much cash you give them, they have zero fundamentals. We've looked at the balance sheet. They don't have a good business model. They ruined it by trying to do an in-house private label instead of selling premium products to people that wanted to buy those premium brands. So now it's almost impossible to recover what you've lost. And you might have to just call it a day. But hey, I wish everyone the best of luck who's buying it. But let's talk about the thing that no one talks about. The Wharton Way. The Wharton Way is something that's crazy to me. I didn't even know it existed. It says, our strategic plan guiding us towards greater influence, innovation, and engagement. And this plan here, the Wharton Way, means that everyone that's ever gone to that college in Pennsylvania will help each other the rest of the way. It's called the Wharton Way. This is why people don't get into trouble. This is why people actually help each other out with these deals, because they've all gone to the Wharton Business College. And if you guys don't know, go look at the alumni list. It's massive. And I'm going to show you one. I'm going to show you some, I should say. And here it is, University of Pennsylvania, Wharton Business School. A graduate would be Donald Trump, even his daughter graduated there too. Gary Gensler graduated there. So he's the SEC commissioner. And how in the hell is he going to enforce anything on his brethren? That's why I think they get away with everything. It's the Wharton Way. That's what I think it really is. If you look here, the founder of BlackRock, Howard Marks, the founder of Oak Tree Capital, Michael Milken, you know who he is. He is the founder and the creator of the junk bond, and he was with the Drexel, Burnham, and Lambert. And then Warren Buffett dropped out, but he went there. Steve Cohen. So there's plenty of criminals, a lot of good guys, don't get me wrong. But the problem that I have with this company, with this school, I should say, is right here. They do these summits every year, and they charge for them, guys. Hey, in 2008, you could get in for $25. I guarantee you that's not the price now. But the Wharton Restructuring and Distressed Investing Conference, 2023. This is the Sandlot for all distressed credit investors and all the individuals that are currently hired with Bed Bath & Beyond were once employed by some of these sponsors. Alex Partners, A&M, which is Alvarez and Marsal. You'll see Latham and Watkins. You'll see all these guys somewhere on the sheet that they've worked with Apollo, that they've worked with each other, and you see the Platinum Partners. You see the ones, FTI Consulting, you see Blackstone, you see Lazard. All of these guys are in on this whole play. Now, what does this all mean? And why am I showing you all this as I sit back and I did that whole video leaning in my chair? Hey guys, I'm going to tell you something, okay? I follow stocks. You guys know that. And then I follow people and I watch what they have to say about the stock. And there's a lot of people out here on YouTube that are gamblers, that are known degenerates. They're looking for that thrill that they're not getting elsewhere in life. I'm just an information guy. There's no thrill for me here. I have the information, I give it out, and I hope that it's educational for you. But when I look at Bed Bath & Beyond, and I see who's invested with it and who's involved with it, and the pedigree that they have, I'll stay away. I'll stay far, far away. Because it's not worth my livelihood. And some of you people out there that are making these decisions to put money into this company, one, probably don't have children, don't have a home that you could lose, don't have cars that you can't afford, don't have a lot of things. but you're hoping and dreaming that you're going to be able to buy them one day. And I'm telling you how to buy them. Go to work. Don't get wrapped up into this stock. I'll never buy a share. I don't care how low it goes. That's just me. But I want you to have the information that no one's telling you. And what are they telling you? That the board of directors all have ties to private equity. That's what I'm telling you. I'm not saying it's Apollo. I'm not going to tell you it's, it's Blackstone or it's this guy or it's that guy. I'm just letting you know the deal that's being worked out is not a deal in your favor. You push out the bad guys, then you can make a deal. You're not making a deal to save this company. No one's going to buy out that debt. What they're going to do is they're going to string it along even longer. I've looked at AMC. I've looked at HYMC. I saw exactly what happened to stock. I'll tell you guys, go look at HYMC, okay? Little gold mine company, right? Mudrick had how many warrants on that stock? They exercised the warrants over the last 2 months. Go look at the price. No, don't go look at the volume. Don't go look at the float because you're too worried about those things. They'll reflect eventually, but go look at the price of the stock. Kind of like what's happening right now with Bed Bath & Beyond. Everybody wants to know why the data is not up to date. Well, they're not showing. Why is it on Reg Show if they're not? Why are they borrowing shares? If there was infinite amount of shares to borrow, don't worry, there is. There's an infinite amount of shares. Go look at the volume. And then go look at the barcode and go look how you have no buying pressure. And I'm going to tell you, don't get wrapped up in market mechanics, guys. The plumbing of the financial markets, do not get wrapped up in them. Stick with fundamentals. That's what's going to make you money. Good luck. Make as much as you can, guys, or risk as much as you want. But know the truth. Sue Gove is not there to make that company survive and turn around. That's not what she's there for. She's there to navigate a bankruptcy. Just like the CFO, just like the rest of the board of directors, and just like those consulting firms that gave them this idea from the jump. Have a good night, guys. Appreciate you guys. I'll see you tomorrow. Peace.